All right, traders, welcome to today's market recap. This is Christian from Hertz Tribeca Trade Group, and today is Tuesday, the 29th. So we're wrapping up the month of November with a little bit of volatility. However, what was kind of interesting today was the VIX was actually finished down on the day, down 1.4%. That's always interesting to me. It doesn't have to be interesting to you, because whenever I say something about the VIX on Twitter, people really get angry, no matter what it is. But I will tell you, my thought on the VIX is that usually something's up when the VIX is down and the S&P is also finishes down for the day. That's usually what's known as a bullish divergence. Again, don't argue with me about it. You can think otherwise, it's fine. But usually it's not a bad sign for the following day. Also a little bit unusual because we do have a Powell speech tomorrow, which everybody will be watching tomorrow. That's at 1:30 tomorrow, as well as we have a number of other economics that are going to come out tomorrow, and then really a lot of economics that will come out. I think more important anyway, or well, I shouldn't say more important, but we'll have the PCE deflator, which comes out on Thursday. Let me just double check that data point just so that we've got GDP tomorrow, which again is a lagging indicator, which I think we went over in yesterday's video. But yeah, the PCE deflator comes out on the 1st, and the Powell speech, just so that you could see, the Powell speech tomorrow is at 1:30. All right, so you might get some fireworks tomorrow, but I was kind of making a little bit of a joke earlier about the Powell speech, because what is he going to say that is much different than what we don't already know. Talk about, and they'll be spending a lot of time talking about inflation, talk about how the jobs data is strong. Again, this is all my guesses, but I'll just kind of give you a little bit of my thought process. So probably talk about how that the job market is surprisingly still strong, and that gives them room to further tighten if they need to. Economics starting inflation, they'll need to see multiple reports of inflation going down, right? That's probably the heart of what I would think that we're going to get out of there. I think that he's gonna say anything that is really, really hawkish? I mean, anything is possible, but I think they're probably pleased with what the market is pricing in here. In a couple of weeks, the 12-14 meeting, 50 basis points, and then it could be another 50 basis points when we get the next Fed meeting, a point and a half. So, what else is, considering this is what the market is pricing in? Of course, this could change based on what his comments are, but I don't personally expect any surprises tomorrow. However, it makes sense to have a little bit of a hedge as we go over the technicals. I'll point that out to you, and what I mean in terms of where to have a hedge, where not to have a hedge, again, in my opinion. Risk disclaimer in front of you. I didn't read this, so make sure that you read everything that we're talking about in this video is for information purposes only. I'm watching CrowdStrike here. They beat on some areas of their earning expectations, but they brought in their guidance. And what's the observation of something like this? Stock was trading 138, already down decently for the year, and trading down all the way to 113, which should get you down, taking out this version point of control down here. But what does this tell you with a stock that's already pretty beaten up from the highs, right? To me, it means that, and this is something that we were talking about before the close, is that CrowdStrike, I always review the earnings history and look at where the company is in terms of a valuation standpoint. But Crowd didn't have great earnings coming in. It doesn't have a great earnings to begin with, reaction in the 10 past reports. But the one thing that you'll notice here is that, again, it's a really expensive company, right? And this market, which we've known for the whole year at this point, is that the market doesn't like these expensive companies, especially when they have just a little bit of bad news. Price to book is a 26, price to sales is still a 16. That's a huge multiple. Again, I'm not a huge valuation person, but I know enough to tell you when something is still super expensive. So even though how much is the stock down year to date? it's down 33% year to date, and it's still, this is gonna that should drop, that should get it down to close to 50%, right? And the company still will be expensive, right? By average historical numbers. So again, why do I bring this up? Just because I think that this market, it kind of tells me that very expensive companies could still have a further leg to go lower in this market, right? And we've talked a lot about that with growth names. Now, it's not to say that the growth names won't rally again, right? We have some positive news on the tape. Powell comes out and he's super dovish tomorrow, or an inflation comes out, which I think is 12.13 is the CPI, right? As I mentioned, we get the PCE deflator as well on the first. Those numbers come out really positive. What do you think is going to happen? The first stocks that will probably go up will be growth stocks, right? There's more shorting that's going on in that group. So again, you kind of have to have a little bit of a playbook for this market. As it is right now, unless something really changes, right? These names are really not in favor because they're still too high valuation, evidenced by what they just turned in on the earnings. Now, one name that we talked about, which was a little bit cheaper, not much, but a little bit cheaper, was Intuit. And I think they're up a little bit. Still they're very, the estimated PE for next year is still 27. You look at the difference in the ratios. Wow, there goes Horizon up to 107. Goodness, that name has takeover interest. It still has a price to sell at 8. That's still an expensive company. Not as expensive as CrowdStrike, but still expensive. Let's see what this name's doing after hours. Right, now it's down, so it's down to 366. So that's starting to sell off too. Goodness. All right, so I was going to make a point that then maybe the little bit of a better valuation name is holding up better, but that's still an expensive company, right? That those numbers, I'm sure somebody with much more better fundamental number crunching than me will tell me that that group is expensive as well. All right, so let's get to the averages, right? And to see where we are here at this point. We had some more volatility come in. I'm going to start with this 1 hour chart because I mentioned and I talked about this pre-market today at Tribeca Trade Group, about the level here, 39.64.5. Notice in the after hours market, we kind of we bounced a little bit. I talked about, and if you don't believe me, like here's my note from this morning, because I don't put this out publicly. This is for members only. But I said, we're going to basically have to get over, I get some clues really come from the short term time frame. And I said that, we're holding this 39.64, but price needs to regain this 200 period moving average, right? Which is this line here. And if not, there's more of a tendency that if it kind of meanders around these levels, that it's vulnerable to support being taken out. Okay, so we're sitting here, right? We did break it and now we're kind of retesting. If we don't get back above 39.64.5, then we could have some further downside, right? And I think like this is all important in regards to planning out, having important levels and technicals. We're going to have a webinar on Thursday for the market webs, and really what the market webs help me do is just understand where there is some important resistance and support, and then have an action plan once that that gets broken, or if there's a rally past resistance. So right now this looks vulnerable to me. 39.64 we tried, right? So if we zoom in here, even on this like 2 o'clock hour, there was some positive news which I didn't really understand anyway, something about meeting minutes, which wasn't a positive announcement because it just basically said what we already know about 50 basis points. And so again, we try to drift higher here, and the market for whatever reason right now just doesn't want to have anything to do with it. So 39.64, and again, we could rally in the overnight market because that's where the majority of gains are made over time. So we could see that happen, but if it doesn't, then I would say watch out, right, to the downside. Now, what's vulnerable here? So as we switch, we're kind of doing this opposite. We started with the shorter time frame, and now we're going to the longer time frame. Usually you want to do it the other way around. But you know, we know that we hit the 200-day moving average a couple days ago. We backed off from that, and you know, we've been sitting in the lower end of this range. So if we break the, you know, just as we were on the top of the range, we have to, you know, plan for what we're going to do if we break the top end of the range. Now we're sitting on the bottom side of the range, and you know, if that level, the 39.64.5, is not retaken, then we've got to be careful of this 20-day moving average being breached, right? And then we'll kind of see what happens in there. But you know, I even put on a little bit of a hedge today, just because we're getting to the point where things are getting a little bit dicey in terms of levels here, right? And 38.17 is a level all the way down there. And you know, besides that, I don't really have another area of support. You know, we can begin to look at this December value area, which we have one more trading day, so it's not going to be an exact. But you know, if that breaks, then you know, it's possible that we could revisit all the way bottom of value at some point, right? Which is down in here and lines up with a 50-day moving average. Again, I'm not saying that that's going to happen. I'm just saying be careful in here if, you know, support continues to get broken and we can't regain that level. What would be somewhat positive for now is if we kind of hang in this range for a little bit, digest a little bit further, shake some people out, shake the trees a little bit, and then maybe start to march higher. But you know, we don't know that for certain, right? No one has a crystal ball, and I wait for kind of signals to form, right? So that's S&P. You know, we look at this NASDAQ, and we know this NASDAQ has been much weaker. Apple's the story right now. You know, Apple is 6.5% of the S&P. It's still 13%. And speaking of expensive, people have really been going after Apple because it does carry a higher multiple than some of its peers. And right now, you know, as we just talked about with CrowdStrike, which is more of an extreme situation. So Apple's now further down in the totem pole in terms of not nearly as expensive, but it's still pricey, right? And there's still it's an overcrowded long. Now this name, you know, we talked about this pre-market, you know, I haven't really been trading Apple to the long side. I actually had it on the short list, you know, of short set, you know, I put out a couple short setups over the weekend. This worked. You know, I didn't take it, but where I think this could be headed is basically down to this lower VPOC at 139, right? And then maybe you could see some type of a relief bounce, but I would just basically use that as a target. Also, you've got some support down here at 137.83. But again, this is not a good looking chart. I still would not, I would be, you know, if you're looking for a long or to buy the dip, I think that, you know, time will come for some other day. I think for now, get some of the longs out of this group, get people to kind of forget about it, because I think it could be a long road ahead. You know, case in point, you know, and I don't go over these names every day because there's no really, you know, I haven't been trading these for the better part of this year, other than maybe a day trade here and there. But look at Amazon. I mean, Amazon really has, you know, talk about a stock that's showing relative weakness. This thing still looks like it's horrible. So, you know, again, the way that I look at some of these names and groups is that, you know, of course you could like the company and you could use its products, but the stock is different than you know, using its products. You know, so it's just not in favor right now. It looks vulnerable for, you know, if I had to guess, and I have no position here, but if I had to guess, I think that that's $80 VPOC gets eventually taken out. All right. But as I move on to other groups and other areas of the market, you know, keep in mind, if something changes, if some type of narrative changes, these names could see a bounce, right? And, you know, you go back to what we saw basically the last CPI report, you know, that was such a huge move in the Qs, but I think a lot of that move, and I've said this before in these videos, was a lot of short covering, you know, for that area of the market. Other areas that, you know, I find what's going on in crude is pretty interesting, right? We talked about crude possibly getting down to 70. Notice that we had a hammer bar yesterday and a little bit of follow through. Now, again, this is still not a bullish looking chart, right? We're just bouncing here a little bit. But let's talk about energy just for a quick minute, because, you know, the X Elite chart really hasn't done much today. Sorry, it hasn't done much in the last month, right? Now it's in consolidation. It could still resolve higher, but I think you're really going to need your energy commodities to go higher. What's been pretty interesting, the two strongest areas that I see within the energy sector are the coal names, which had a really nice day today. CEIX was up 6.8%. BTU, so these are coal names. BTU is up 8.8%, heavily shorted name, right? So again, you look at these charts, they're still in uptrends. They're still acting really well. Another one that I like to look at, which didn't have the momentum today, is AMR, right? And then the other group that I like here is the refining group. Now they've been kind of a little bit cold, which is fine. I think they're digesting some of the recent move, but I actually went along a little bit of MPC today, right? This thing got a little bit stretched, right? MPC, again, going back to here, had really strong earnings. They've been moving nice. So a little bit of a dip in here. And I'll look to take that trade off, back to around the highs. If it breaks the 20-day moving average, I'll be out of that trade. But a little bit of a dip there. That's one refiner. A couple other ones are Dino, which actually act a little bit weak today. Valero is another one, right, which was positive but underperformed the group. So we'll have to keep an eye on this group, right? They're pausing here right around the previous highs there in Valero. So again, some of these things you have to be a little bit patient with, even with the names in uptrends. Other areas of the market that, of course, the Chinese internet names, huge move, 6%, and this still doesn't get the ETF above the 200-day moving average. Monster move the last couple days, and it's still in a downtrend. So it's kind of frustrating when I see that, because I don't like to trade names that are in downtrends. I try to avoid names that are in downtrends. I wait. Once in a while, I'll take a small shot, like on a day trade or a very short-term swing on a name in a downtrend. But for the most part, I stay away. I'll tell you the areas that do look good. PDD had strong earnings. They had nice follow through today, right? And this is looking like it's going to crack into value for the year, right? So here's a name that's in an uptrend, right? And that's the beauty of being a stock picker, is that you don't have to go after the group that is showing that is showing the weakness and still in a downtrend, right? Another name is this Futu, right? Which is also, I think this is above. Yeah, I mean, so you got nice base breakout of this, and that's now in an uptrend, right? After going sideways for a while. So ultimately, I think this possibly, because it's a decent move up there, 67 is where the upside would be there. But again, this was the group that really had momentum today in a tough market. Keep in mind, China names, they do carry another level of risk. So position size is important. When something carries larger risk than other names, what do? In my opinion, is to decrease your position size because of the added risk. All right, so that's a couple areas that I thought were interesting. The metals and mining were also strong today. Believe it or not, in the metals and mining, names that, again, it's always important to kind of look to see what's in your ETF, but there's coal names that are in metals and mining, even though that's what it's called. Other areas that I thought, that looked pretty good. I did not pull the trigger on any of these areas, but tech resources was pretty strong today. Right. I had tried speaking of XME, I had tried an XME trade, in here, and I got out of it, I think, for around a scratch or something like that, but it's still kind of hanging out here. I would watch this group to see if it can push higher. Also, the gold miners were strong today, up 3%, although it's crazy when you see something that has a up 3% day as a ETF, and it's still an inside day. So again, I don't think there's anything majorly on technical basis, much to do there. Other areas that I thought were strong, PBR saw some call activity. Valet had, this is tough because there's a lot of calls that hit the tape today, but the name's already up 6%. So again, it's not extended here. It'll be interesting to see if it follows through, but I never like buying a name, that sees call activity when the name's up 6%. Those are just, people that are looking for, I guess, further momentum. It's more interesting to me when a name's like in consolidation and sees option activity, but it certainly saw a boatload of calls today. One other group that I thought was interesting today, I got nothing but snarky responses. I get it when you ask a question on Twitter, but I like to be thought-provoking sometimes. But look at all the beverage names, right? People told me that they're all expensive and overly priced. Okay, I get that, but Pepsi has been a really strong name. You got to pull back in some of these areas, right? Monster was a name that I traded last week. I actually started a position into this weakness today. I did the right thing here because this market is really tricky. I decided to kind of take my my profits and I ran with it. And I think on this day, I don't think I caught the final day, but now look at it right back to the breakout point. Let's just zoom in on the 1 hour chart for a minute. Here's why I just started a position, because it's possible that this VPOC gets taken out at 99. We'll see if that happens. And if so, it just may need a little bit more time, considering it's kind of caught between this week's value area and a lower VPOC. But I think if you could have some patience in here, it may straighten itself out in the coming days, right? And if you go through, Celsius, which was a hot name a couple of days ago, look at this thing. Almost got to this VPOC over here, very close to 112. Maybe it's saving it for later. So again, it's kind of dipped pretty significantly today. Watch to see tomorrow if it cannot hold on to 102.45. It looks a little weak in the after hours, but 102.45 would be the level to try to trade against for that name. All right, guys, I don't have a ton of other names on my watch list for today. What else was I looking at? Here's Caesars. Saw some attention and small call buying, right? Again, this is a name that's interesting. I did not do anything with this one, but I would watch 49.37, right? What's interesting about this is, this is another name that got rejected at the 200, but it's just kind of sitting back here in tight consolidation. So I'll wait, and maybe this could just be a short-term trade up to 53. That's where I potentially take profits. 9 was a name that saw some option activity, a couple energy names. This actually performed pretty well. Nice catch of the 20-day moving average and bouncing. Like I said, saw some option activity. Here's a couple of things that I traded today. Oops. There we go. ST&E was actually able to take a target. Remember, we saw calls. I think that was on Friday that we saw. It was either Friday or Wednesday. Sorry, I'm forgetting the day, where we saw a lot of calls trade in this name. Watch for a break of 11.17. I bought, I think it was on Friday, because I mentioned it wasn't a good looking chart. But I was able to take target number 1 in that one, but I would really be looking for a move above 11.17. FICO, I was able to hit a target in that one. That was a starter from yesterday. Only one target in that one. Took a quick target in AEHR. This thing, I thought about taking target 2 right there at the VPOC. Again, it's just such a shallow target to be taking that I decided not to take it at 26.83. Stock kind of gave back some of those gains at the end of the day. Still finished slightly positive for the day. Lulu and PI, which I decided to get out of just as in terms of risk management. And that's basically it for today. So, overall, I would say this was a bit of strategy that I gave at the end of the midday session. The way that I trade, and this is what I go over with traders. I spend more time than just going over for 30 seconds here, but I'm mostly trading things to the long side. I do hedge, and I actually did put on an SQQQ position, right? So this is a hedge for me. I like to basically hedge once the price gets below or loses the 5-period moving average, even further when we lose the 20-day moving average. And if price gets back above these two things, I take the hedge off, right? But I'm only basically looking to hedge when when these things happen, right? When we get a big swing to the downside, I want to have some protection for that, right? So my basic goal is to try to make money when the market is looking good, when we have breadth expansion. And then once we start to kind of lose the trend, then I try to get more defensive. You'll see me throw on a hedge there, and of course always honor stops, but try to kind of bring down my position size and so forth, right? That's the whole key, is make money when the market's going up. Of course, if you're really aggressive, you could trade things to the downside, but I really try to limit and try to avoid giving back a lot of profits when the market changes. So we're in the process right now, and that's kind of the bottom line, is that while NASDAQ continues to show relative weakness, there's a lot of areas in the overall market that are still hanging in there, but you've got to be prepared in case this does start to turn back to the downside. Okay, guys, that's it for today's video. Have a great night. See you tomorrow.